These next 3 months are going to be very important for us crypto buyers because over this time, many of us will make decisions that will set us financially free for life. And no, I am not exaggerating. You can kind of imagine buying Bitcoin for $3,000, BNB for $10, ADA for 3 cents, or even Ethereum for $100, and that is what is likely coming very soon, but of course not for those altcoins. I'm talking about large caps with 40, 50, maybe even 60x potential, basically allowing you to buy quality projects in the large cap area for cents on the current dollar. You see, over the next 2 years, the crypto market will see pumps on pumps on pumps, with of course just as large corrections along the way as well. However, I don't think we'll see one quite as large as what might happen over the next 3 months here. So in today's video, we are going to look at a solid game plan for what may happen in this very important crossroad and how you can take advantage of not one, not even two, but likely 3 possible market corrections that could allow us to buy altcoins at a 50% discount from today's prices. And look guys, honestly, whether we do or don't have a massive correction from these events, you've got to understand that prices over these next 3 months are likely never going to be cheaper than what they are at today, even if those future bull market corrections happen. And you, of course, can thank the Bitcoin ETFs for that. So it's very important to take advantage of what might be here. So I want you all to, of course, listen as closely as you can because no one, I don't care who you are, is smart enough to beat the market based purely on intuition or skill. So, of course, as you all know, if you fail to plan, you will most definitely plan to fail. So with that said, let's simply plan. And just a very quick reminder, if you appreciate how much effort I put into this video, or just simply wanted to say a big thank you, hit the like button and subscribe so you can achieve your crypto goals. So with that being said, I want to dive today into the possible scenarios that might cause a crash here, what to look out for in that case, but also how you can take advantage. The most important thing and the beauty of us being in crypto at the current point is that we have hindsight. We have the advantage of time. We are right in the very beginning of the bull run phase, which is going to allow us to, again, take advantage if we do have a crash here, get our final or at least larger positions in so we are set. All we can do is then relax. So I guess the question on your mind is going to be what are these potential crashes coming up here? Well, there's 2 distinct possible crash events, but there is actually 3 that might come from it. Now, in this case, the 3 technically are the ETFs, Wave 1 and Wave 2, and the Bitcoin halving as well. Now, Bitcoin halving itself, we will touch on this very briefly in a moment here, but it's not something I want to take too much into consideration because of a reason I will tell you momentarily, okay? But the ETFs are something that we have the benefit of being exposed to right now. Remember, we are early, guys. This is the largest event that has happened in crypto since Bitcoin's inception way back in like 2009. So you have to remember, while you might be sick of me or other influencers talking about the Bitcoin ETFs, keep in mind it is for your benefit. This is so crucial because I think we will have a retracement happening here soon, whether they are approved or not. And I get it, you're thinking to yourself, how in the hell is a Bitcoin ETF being approved going to be a market crash? Well, here's the thing you have to understand in crypto. A lot of crypto is built around buy the rumor, sell the news. All of this positive price action back over here is likely a buy the rumor event. Now, I've heard both sides of the story. I've heard the side that says that wasn't buy the rumor. A whole bunch of other events were coming up and it just happened to be a market just beginning in the bull run. I don't think that's correct, right? I think that this was all in anticipation for the ETFs because this all basically happened at the time these ETFs were basically all officially announced. So I don't think it was because of that. I definitely think this is a big buy the rumor event, which typically means on the day of the news, on the day of the approval, we typically will see a crash. That's not why I'm here. I'm here to tell you right now that I think that the ETFs in wave 1, this first wave, on the 10th of January, we can expect to happen here, to be a 90% success rate. And we'll go over a couple people in a second here that also do agree with that statement. Actually, that's where I nibbed it off myself. I got it off what they said. So I believe there will be about a almost guaranteed percent that we do have at least some of these ETFs approved. Now, there is 14. These are 13, I believe, but there is a 14th in the mix now. And these are likes of, Van Eck, ARK Invest, iShares from BlackRock over here, Grayscale, Franklin, Valkyrie. The list goes on. Very, very big ETF managers over in the States, basically, and worldwide at that fact as well. So they're all in the mix right now, but it's this list that came out from James here. James Seffert is the gentleman that I'll actually talk more about in a second here. He is very much well and truly qualified to talk about this sort of stuff in depth, and he has been keeping myself and the majority of the community up to date with this information. He literally said today that 11 of these 14 ETF issuers should likely see theirs approved on the 10th. That is 11 out of 14. That's like an 80% success rate, or at least approval rate. That's a lot. All they have to do over here is continue with their amendments on their current S1 filings, which is basically the filings that allow them to basically be approved by the SEC. And in this case, we will have a resounding success, right? Again, 11 out of 14 will be approved in the few days here, okay? Again, I'm recording this on the 6th, so 4 days. This is great news, but the reason why, again, it'll crash is likely because we were going to have a sell the news event. People are buying in anticipation. When these are approved, keep in mind, there is no initial large amount of demand. Demand isn't just instantly added into Bitcoin and in the crypto market. These themselves have to be, of course, once they're approved, activated. And then from there, the institutional investors that are going to actually benefit from these ETFs have to then go and decide to buy them, which is a whole process. So what I think might happen here, and as we'll see in a minute, James will agree, is an event where we kind of come up a bit like this. Well, I'm probably overshooting it here. Probably like this, and then likely back down again. Or at least it may come back down at some point like this. Now, here's the next thing, right? What happens after these approvals? Well, I'm estimating between a 5 to 15% drop. Now, the reason why 5 to 15% is basically because this is the global market cap. I'm expecting a fall to somewhere around support. I think we'll fall somewhere around there, and the two major levels of support are around the 1.5 and 1.37 trillion global market cap. But there is a third level in which we could fall 20%, which is the 1.25 trillion global market cap level, which is a very strong level of support. Now, again, this will purely be the fact of degens, retail like you and I, going, hey, these ETFs are approved, I want to buy. Price shoots up, comes back down because they realize, oh, wait, there's nothing really popping up. There's nothing like helping bolster up this demand. It's just us buying, and then sooner or later it will come crumbling down, right? So again, I do think we will at some stage fall beneath. Now, there is a chance that we actually do not get approved on the 10th. The reason why is actually because James recently released this from Better Markets. Better Markets is basically a non-for-profit over there in the US that just helps the US economy. That's as far as I understand it, right? And they come out with this recent report. It says 5th of January 2023. They actually made a mistake. It most definitely is 2024. I've read the report. A lot of sources come from late last year in 2023. And they just simply show their support for the fact of not approving the ETFs by the 10th, okay? And this isn't the only, I guess you could say, entity doing this as well. There is Nate over here made a comment about another player over there in the US that on the 4th, so a couple of days ago, also had their own sort of thing to say as well for the denial of these ETFs. So it looks like there is that small, ever so slight chance that these ETFs won't be approved. But again, James, and many others do think that there is a resounding chance that they are approved, right? Again, a 90% chance. And if they are, they most definitely will be approved over here on the 10th of March, 2 months later, when that wave 2 has to have their deadline over here, okay? So regardless, that's going to happen. So we might have a correction, but again, I don't think we will fall anything beneath a 15%, at worst 20% over here, which, as we'll see in a second, will probably be around about a $30,000 Bitcoin. So with that said, there's a few situations that might play out in this case. Situation 1, the SEC approves majority ETFs on the 10th, so in 4 days, and the market pumps 10 to 20% in a single day. There's 2 outcomes that can come from this situation. Number 1, the market pumps 20% or 10 to 20%, which is sustained until a correction in a few weeks to a few months. Outcome 2, which I think will actually play out in this case, is the market pumps 10 to 20%, which is sustained for a few days or a week until a correction due to no immediate inflow from the ETFs. Again, depending on how long they take to come online, depending how long they take for the issuers to have an inflow from institutions and, regular retail people, this will take time. And as we'll see in just a second here, I am agreed with James and other institutions as well. Now, there's a second situation that might play out. Again, the ETFs could be denied on the 10th, which causes a correction/panic temporarily. Outcome 1. Panic sets in temporarily. Markets don't move much due to certainty that March will be the new approval date. Again, the 10th of March will likely be that next date. Or outcome number 2, panic will set in the same way. Markets might dump 5 to 15%. Over the coming month, we will see a steady rise back to the same levels in March. So in this case, we could see something like this, down and then we might see something like this, okay? Sort of a big V, if you will. So in any case, the outcomes are far more favorable to position your portfolio according to a slight dip or correction at some stage. This will also work well with the Bitcoin halving, considering it's a time of temporary volatility as well. So this, before we continue, will bring me back to the Bitcoin halving. Now, the Bitcoin halving, we typically do see Bitcoin to be more volatile. And when I say volatile, I mean we typically see Bitcoin fall down ever so slightly before coming back up to eventually have the bull run, right? It's pretty much a slight dip. Now, I don't want to touch on this too much because a lot of Bitcoin miners' balance sheets are up significantly from the previous halvings and cycles. That indicates that we won't have a large sell-off. Those guys will have more than enough Bitcoin to sustain themselves because, again, as I kind of say, the Bitcoin halving is quite literally the equivalent of you going to work tomorrow and getting half your pay for the same amount of work that you do. It's the same for miners. So if, of course, you have a lot of savings, you can weather that temporary storm until, of course, you can begin mining enough Bitcoin and Bitcoin's price begins to go up and up and up to then make that halving in their profits worthwhile. With that said, I want to now take us to my reasoning here. This is the big stuff before we get into how to actually capitalize. Now, VanEck and Bitwise are both, again, issuers in these Bitcoin spot ETFs, okay? They are mentioned down here, Bitwise and VanEck, huge asset managers themselves, and they have both had reports saying that the inflows from the ETFs being approved over the next few years won't be much. VanEck, 40 billion in the next 2 years of trading. Bitwise, 50 to 100 billion over the next 5 years, okay? So just remember, we are talking about, again, around 30 to 40 billion dollars in the next 2 years. Now, 30 to 40 billion for Bitcoin is like maybe a 5% pump in 2 years. It is not much. So that immediately should at least flag something in your mind to go, okay, let's look into this deeper and let's do that, right? Now, by the way, for those who are wondering, this was all built off the gold ETFs that were approved way back when State Street brought them to the stock market in 2004. Now we have James Seffert, again, who is a Bloomberg analyst for ETFs. He's worked in this area for, as you can see here, about 9 to 10 years. So he definitely knows his way around ETFs. And he said a go-ahead in the coming days could bring 10 billion in inflows to Bitcoin ETFs in the first year. He said, I don't think we're going to get over 100 billion in the first year or two. To put that into perspective, gold ETFs have about 100 billion in the US in total. Let that sink in. Furthermore, Seffert warned that widespread adoption could take weeks or even months, as institutional investors will likely carry out due diligence before adding their crypto to their portfolios. Months could, be the result here, guys. So again, there's only so much that we can be propped up in terms of, buying power from retail. Retail can only do so much before we go, oh, there's not much money coming in here from the institutions, from the ETFs. I've seen it time and time before in crypto. And lastly, here's a probably more jarring example over here from Bitfinex. They said the ETFs could draw as much as 3 billion from investors in the initial days of trading and potentially billions more in the long term. The higher estimates range about 28 billion. That's of course quite bullish, right? However, they said optimistic forecasts are around 10% over the first few days, 10% of Bitcoin's actual current market cap. But this is interesting. They said if the investment flows are less than 10%, it is possible the crypto market sees a reversal of its recent gains. So take that into consideration, hence why I think we come to these levels over here. Very, very important. Let's begin. How can we actually benefit from this? All this being said, your mind's probably swollen up right now thinking to yourself, okay, well, what the hell do I do, Kyron? That's a good question. So I've touched on this before in a recent news video, which is why you should subscribe, because I touch on this as it comes out in real time before I make one of these videos. So I look at crypto and anything I do in this industry as risk to reward ratios. What's the risk you will get from doing something and what is the reward? So in this case, the risk to reward I see as being in and being out of crypto. So I think 50-50 is a gamble. At that point, you're on the fence directly. I think, in my opinion, you want to keep risk between a 1 to 2, ideally 1 to 3 ratio. Again, it's in your favor here. This is a good way to put it and think to yourself, right? So green, again, is buying and holding cryptocurrency. So if you own any crypto right now, you could basically buy anything in the top 50 to 10 altcoins. So the top 50 to top 10, and likely 10x from today's prices. Alternatively, you could buy anything in the top 100 to top 50 and likely 10 to 15x. And again, top 200 to top 100 and 20x. So suffice to say, whatever you buy, you're gonna make money. Then cash, if you're holding your cash right now, think of it like this. If we crash, yes, you most definitely will buy altcoins at a 20 to 50% discount. That's true. And you're gonna love yourself for it. You're gonna say, haha, I got it all right. I've got 50% of my portfolio or 100% of my portfolio in cash right now. We had a massive crash and I bought these altcoins for pennies. But you also risk buying at a 50% markup. If we don't have a massive correction, maybe we do, maybe it only goes down 5% and altcoins don't crash as much, you're going to be really killing yourself because you're going to be buying at basically a 50% increase from today's prices. What I would do is think about it like this. How much crypto should you hold and how much cash should you hold? And in my opinion, it all depends on you, but I think 70% crypto, 30% cash, or 75% crypto, 25% cash. I think around these numbers. I think, again, around 2/3 in crypto, 1/3 in cash sounds about right to me. Why do you want more crypto and less cash? Well, you'll be able to almost double your crypto position in terms of the amount of tokens you hold. So if you currently hold, like, let's just say 500,000 HBAR tokens, you'll likely be able to buy another 500,000 more. With that 30% crash, if we crash 15% globally or more, that would be, again, the level over here at 1.3 trillion. 2, you're playing a less risky game than someone who would be holding 50% or more in cash, because if you hold more than 30% cash right now, you risk buying a large portion of your portfolio at higher prices, even with those future pullbacks. And number 3, the chance we fall more than 20% globally with these ETFs is very low. So the chance that we get to this level down here, 1.25, is very, very low. Of course, that would kind of be, I think, a situation if these ETFs were denied, and then, of course, we had this sort of capitulation event happen before the ETF on wave 2 happened. So that would mean for Bitcoin, I think Bitcoin would go between a $35,000 to $30,000 level. But as Van Eck and many other prominent sort of institutions in the space say, I don't think that we will see a price of lower than $30,000 for Bitcoin anytime soon, if not maybe ever. So with that said, how do you prepare? It's important that you assess your goal in crypto. Work back from your goal. How many multiples do you need? And don't forget tax. So for me, I know I need to buy 4 properties outright, and I need to buy 4 properties because I want $80,000 passive income per year. Basically, I need about $2.7 million cold hard cash, including tax, to get to my goal. I think after tax, it's like $2.4 million to buy those houses outright. So again, that is my goal. So I know I'm putting 100K in crypto. I need 2.7 million. So I need a 27x. So my goal and my idea now for my altcoins becomes a 27x. And then you assess your entry. So you might have a whole bunch of altcoins you haven't yet bought into, or maybe again, you want 500,000 HBAR tokens and you only have 100,000. So what we have to do here is locate an entry for each of your altcoins you still want to accumulate. Now, you even want to do this for the ones that you are considering to get into, but you haven't yet. For me, that's like PokerStarter, for example, Cedarfy, Pith Network. We have to go into those ones as well and assess even ones that you might never even buy, because we want to make sure if that one tanks and goes into our little buy zone area, we can just buy it. Whereas the ones that we might be eyeing off, like HBAR, for example, might never go into our buy zone area to achieve our goal. It's very simple in crypto and even in life, right? If something is not met, why would we continue to do it? Okay, it just doesn't make any sense. And that's a very big problem I think a lot of us do have, is we want to, fall in love with the project. We want to actually buy it because we think it's great tech, yet we have these goals that, again, most people will ignore this. Most people don't even want to bother thinking about, oh, this is how much I actually want to achieve. Everyone just goes, I want a 10x, I want a 20x. But do you really? Like, you might only need a 9x, for example, or a 5x to achieve your goal. And that way you can get out of the market and be safer. So need I say more? I don't want to get on a massive rant here, but needless to say, you want to set up entry levels for each and every single one of your projects. Now, I am not going to show that today. And the reason being, before everyone gets angry at me, is because that in of itself is a very solid, I'd say about 15 to 20 minute video. Now, I can rush through it in 5 minutes, but I want you guys to understand fully. So what I will do is leave a link down below to a very recent video I have done, which is this video right here. This simple crypto plan will make millionaires in 2024. And that will not only show you the actual not exit plan itself, but entry levels. Watch that video. I'll leave it down below. Again, sorry I didn't go over it. Again, it's like a 23-minute video for the most part. It's a good 10 minutes, 15 minutes talking about what I want to talk about. So hope you understand. For those of you who want to learn more, you have that option if you really want to. So this is coming up very soon, guys, right? The next 3 months could be big, very, very big, depending on what actually happens. Are they going to be approved? Are we going to see a little retracement? Are we going to be denied initially and have a massive retracement? No one knows. That's the beauty of crypto. But for those who are prepared, we will reap the most rewards. So with that said, thank you all. Enjoy the next few weeks, few months, and I wish you all the best for 2025. If you enjoyed the video and made it this far, I would really appreciate a like and subscribe if you haven't already. You're crazy not to. All right, guys. Take care. Talk to you soon. Bye.